Based on the historical data and forecast, Bitcoin has shown volatility with a general upward trend. The RSI consistently fluctuates, indicating periods of both overbought and oversold conditions. The Bollinger Bands suggest that the price is currently near the upper band, indicating a potential pullback. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands to capitalize on potential price swings. The support price of $104,800 acts as a crucial floor, while the resistance price of $107,700 provides an upper limit for our immediate trading range. My proposed strategy involves a long position when the RSI dips below 42, aiming to capture a bounce from the oversold territory. Specifically, let's initiate a buy order at $101,400. To mitigate risk, place a stop-loss order at $100,000, just below the bottom of the Bollinger Bands. The initial target price will be $105,800, aligning with the forecast price and the recent resistance level. If the price reaches $105,800, we will consider moving the stop-loss to break even to protect profits. Further gains can be targeted at $106,100, coinciding with the forecast price for June 9, 2025. This combined approach leverages both momentum and volatility indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a volatile trend with fluctuating RSI and Bollinger Bands. The RSI consistently fluctuates above 50, indicating a generally bullish momentum, but has recently dipped into oversold territory, reaching 46.2 on June 8, 2025. Considering the forecast, Ethereum is expected to remain around $2,560 to $2,590 over the next week. Given the recent oversold signal and the expected price stability, I recommend a long position entry at $2,560. Place a stop-loss order at $2,470, which is the established support level, to limit potential losses. A target price of $2,680, near the recent resistance level, provides a reasonable profit target. To refine this strategy, I will incorporate the Bollinger Bands. The price has been oscillating within the bands, suggesting sideways movement. If the price approaches the lower band, around $2,420, it could signal a potential buying opportunity. Conversely, if the price reaches the upper band, around $2,690, it could indicate a potential selling point. Combining the RSI and Bollinger Bands, the most efficient strategy is a long position entry at $2,560, with a stop-loss at $2,470 and a target price of $2,680. This portfolio balances the oversold RSI signal with the overall bullish trend and incorporates the Bollinger Bands for added confirmation. Based on the historical data and forecast, XRP shows a slight upward trend with periods of volatility. The RSI consistently dips below 50, indicating periods of weakness, but never reaching the oversold level of 20. The Bollinger Bands show XRP fluctuating within a range, with recent prices nearing the lower band, suggesting a potential bounce. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My recommended strategy is to enter a long position at $2.21 when the forecast begins. Set a stop-loss at $2.17 to protect against a potential downward movement. The initial target price is $2.24, aligning with the forecast and the upper Bollinger Band. If the price continues to rise, adjust the target price to $2.27, coinciding with the recent resistance level. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach to maximize potential returns while minimizing risk. Based on the historical data and forecast, BNB shows a slightly downward trend with recent volatility. The RSI fluctuates around 50, indicating neither overbought nor oversold conditions. However, the forecast for the next week predicts a continued downward pressure, potentially testing the support level of $632. Considering this, I propose a short-term contrarian strategy. We will initiate a short position at $652. The stop-loss will be set at $692, just above the upper Bollinger Band, to protect against a potential upward breakout. Our target price will be $632, coinciding with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks below the lower Bollinger Band, which is currently around $634, it would confirm the downward trend and provide an opportunity to adjust the target price to $620. Conversely, if the price approaches the upper Bollinger Band, we will immediately close the position to minimize losses. This combined RSI and Bollinger Band approach aims to capitalize on short-term price dips while mitigating risks through strategically placed stop-loss orders. Based on the historical data and forecast, Solana has been experiencing a downtrend, with the price fluctuating within a range of $144 to $165. The RSI consistently indicates oversold conditions, particularly during the recent period, hovering around the 30 to 40 range. The Bollinger Bands suggest that the price is approaching the lower band, indicating potential for a bounce. Considering this, I propose a contrarian strategy focusing on short-term gains. We will enter a long position at $147, placing a stop-loss order at $144 to protect against further downside risk. Our initial target price will be $152, aiming to capitalize on a potential rebound. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band and shows signs of rejection, we'll consider entering a long position. For the next week's forecast, the price is predicted to stay around $147 to $151. Therefore, a second entry point could be at $149, with a stop-loss at $147 and a target price of $153. This combined approach leverages both the oversold RSI and the Bollinger Bands, creating a portfolio with multiple entry points and risk management measures to maximize potential returns while minimizing losses. Based on the historical data and forecast, Dogecoin has been in a downtrend, consistently approaching the support level of $0.182. The RSI consistently dipped below 50, indicating weakening momentum. The forecast predicts further decline, potentially testing the $0.178 to $0.18 range. Considering these factors, I recommend a contrarian strategy, anticipating a potential bounce from the support level. Our entry price will be $0.186, coinciding with a slight rebound from the $0.182 support. To mitigate risk, we'll set a stop-loss at $0.178, just below the forecast low. The target price will be $0.194, aligning with the recent resistance level. To enhance the strategy, we'll incorporate Bollinger Bands analysis. The price is currently near the lower band, suggesting a potential mean reversion. We'll initiate a long position at $0.187, placing a stop-loss at $0.178, just below the lower band. The target price will be $0.194, the previous resistance level. This combined strategy leverages both RSI and Bollinger Bands to identify high-probability entry points and manage risk effectively. The portfolio will allocate 60% to the RSI strategy and 40% to the Bollinger Band strategy to balance risk and potential reward. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI consistently fluctuates but generally stays above 50, indicating a bullish momentum. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential price movement. Given the forecast prices, which predict a continued rise, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to optimize our entry and exit points. The initial entry price will be $0.284, coinciding with the first day of the forecast. A stop-loss will be placed just below the bottom of the Bollinger Band, at $0.262, to mitigate potential losses if the price reverses. The target price will be $0.294, aligning with the highest forecast price within the week. To refine this strategy, we will incorporate RSI levels. If the RSI drops below 30 during the week, indicating an oversold condition, we will hold the position with a slightly adjusted stop-loss at $0.278, near the support level. Conversely, if the RSI reaches 70 or above, suggesting an overbought condition, we will take partial profits at $0.291 and move the stop-loss to break even. This dynamic adjustment will help us maximize returns while managing risk effectively. The overall portfolio will prioritize the long position on TRON, with adjustments based on RSI and Bollinger Band signals, aiming for a high return investment while maintaining a reasonable risk profile. Based on the historical data and forecast, Cardano has shown a downtrend from May 26, 2025, to June 8, 2025, with recent price fluctuations. The RSI consistently remained below 50, indicating a bearish momentum, and touched the oversold level of 30.5 on June 8, 2025. The forecast for the next week suggests a continuation of this downward trend, with prices hovering around $0.66. Considering these factors, I propose a short position strategy. We will enter a short position at $0.666. The stop loss will be set at $0.684, just above the recent resistance level and the upper Bollinger Band. The initial target price will be $0.627, aligning with the support level. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential bounce. However, given the overall bearish trend and the forecast, we will prioritize the short position. If the price reaches the support level of $0.627, we will take partial profits and move the stop loss to the entry price of $0.666 to secure the gains. If the price continues to decline and breaks below the support level, we will adjust the target price to $0.6. This combined strategy, leveraging RSI and Bollinger Bands, aims to capitalize on the prevailing downtrend while managing risk effectively. Based on the historical data and forecast, SUI shows a downtrend with significant volatility. The RSI consistently fluctuates, dipping below 40 and approaching 50, indicating indecision. The Bollinger Bands demonstrate considerable price swings, with the price frequently touching both the upper and lower bands. The forecast suggests a relatively stable price around $3.2, but the overall trend remains uncertain. Considering these factors, I recommend a cautious strategy focusing on short-term movements. My proposed strategy is a combined approach utilizing RSI and Bollinger Bands. We will enter a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. Specifically, we'll enter at $3.16 plus $0 when the RSI is 38.2 and the price touches the lower Bollinger Band. The stop loss will be set at $2.9 plus $0 to limit potential losses if the price continues to decline. The target price will be $3.44 plus $0, aiming to capture a short-term upward correction. This strategy aims to capitalize on potential bounces from oversold conditions while mitigating risk with a well-defined stop loss. Based on the historical data and forecast, Chainlink has been in a downtrend since May 26, 2025, with the RSI consistently below 50 and nearing oversold territory. The forecast for the next week indicates a continuation of this downtrend, with prices hovering around $13.4 to $13.8. Considering the support price of $13.3 and the recent dips below the lower Bollinger Band, a short position is warranted. We will enter a short position at $13.7, placing a stop-loss order at $14 just above the recent resistance and the upper Bollinger Band. The initial target price will be $12.9, coinciding with the recent support level. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will tighten our stop loss to $13.6. Conversely, if the RSI rises above 80, signaling an overbought condition, we will close the position and reevaluate. The portfolio will prioritize the short position with a conservative risk-reward ratio, aiming for a potential return of 1.5 to 1.0. The final target price will be $12.6 if the price continues to decline. Based on the historical data and forecast, Eigenlayer shows a mixed trend with periods of both upward and downward movement. The support price consistently remains at $1.3, while the resistance fluctuates around $1.53. The RSI values range between 47.2 and 62.3, indicating both oversold and overbought conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, a combined strategy utilizing RSI and Bollinger Bands is recommended. The strategy involves identifying potential entry points based on RSI and Bollinger Band signals. When the RSI falls below 20, indicating an oversold condition, and the price touches the lower Bollinger Band, a buy position can be initiated at $1.42. The stop loss should be set slightly below the support price at $1.29, and the target price should be set at the resistance price of $1.49. Conversely, when the RSI exceeds 80, indicating an overbought condition, and the price touches the upper Bollinger Band, a sell position can be initiated at $1.44. The stop loss should be set slightly above the resistance price at $1.5, and the target price should be set at the support price of $1.3. This combined approach aims to maximize potential returns by capitalizing on both momentum and volatility signals. Based on the historical data and forecast, Solana has been experiencing a downtrend, with the price fluctuating within a range of $144 to $165. The RSI consistently indicates oversold conditions, particularly during the recent period, hovering around the 30 to 40 range. The Bollinger Bands suggest that the price is approaching the lower band, indicating potential for a bounce. Considering this, I propose a contrarian strategy focusing on short-term gains. We will enter a long position at $147, placing a stop-loss order at $144 to protect against further downside risk. Our initial target price will be $152, aiming to capitalize on a potential rebound. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band and shows signs of rejection, we'll consider entering a long position. For the next week's forecast, the price is predicted to stay around $147 to $151. Therefore, a second entry point could be at $149, with a stop loss at $147 and a target price of $153. This combined approach leverages both the oversold RSI and the Bollinger Bands, creating a portfolio with multiple entry points and risk management measures to maximize potential returns while minimizing losses. Based on the historical data and forecast, Injective shows a fluctuating trend with periods of consolidation. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions for most of the period. However, there were a few days where the RSI dipped below 48.5, suggesting a potential oversold condition. Considering the forecast, the price is expected to rise gradually, starting from $13.3 and reaching $14.2 within the next week. The Bollinger Bands suggest that the price has been trading within a range, with the current price near the center band. I recommend a long position strategy with an entry price of $13.3, a stop-loss price of $11.3, near the support level, and a target price of $14.2, based on the forecast. To refine this strategy, I will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating a strong oversold condition, we can enter a long position at $11.3, set a stop loss at $10.4, the bottom of the Bollinger Bands, and target $14.2. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we should avoid entering a long position. This combined strategy leverages both momentum and volatility indicators for enhanced risk management and potential profit maximization, aiming for a high return while mitigating potential losses. Based on the historical data and forecast, Bonk has been in a downtrend, with prices consistently declining from 0.0000202 to 0.0000148. The forecast for the next week indicates a continuation of this downtrend, with prices expected to hover around 0.0000152 to 0.0000160. The RSI consistently stays below 50, indicating a bearish momentum, with a low of 35.0. The Bollinger Bands have been widening, suggesting increasing volatility, and the price is currently near the lower band, which further supports a potential downward movement. Therefore, I recommend a short selling strategy. We will enter a short position at $0.0000156, placing a stop-loss order at $0.00000158 to limit potential losses if the price unexpectedly rebounds. The target price for this trade is set at $0.00000145, aligning with the established support level and providing a reasonable profit margin. To optimize our portfolio, we will implement a combined strategy utilizing the RSI and Bollinger Bands. The RSI indicates an oversold condition below 30, suggesting a potential bounce. However, the downtrend and forecast data, along with the price near the lower Bollinger Band, strengthen the short-selling case. Therefore, the primary strategy will be short selling with an entry at $0.000156, a stop loss at $0.00000158, and a target at $0.00000145. This approach balances the risk of a potential bounce with the prevailing bearish sentiment, aiming for a high-return investment with controlled risk. Based on the historical data and forecast, Dogwifhat has shown considerable volatility, with support around $0.814 and resistance around $1.12. The RSI has fluctuated between 42.2 and 63.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened and narrowed, suggesting changing levels of volatility. The recent downward trend, especially the drop to $0.814, combined with the forecast predicting prices around $0.96 to $0.931, suggests a potential for a short-term rebound but overall a slightly bearish outlook. Therefore, I propose a combined strategy leveraging RSI and Bollinger Bands to capitalize on short-term movements. The primary strategy will be a long position entry at $0.826, coinciding with a bounce from the support level and the RSI nearing oversold territory. A stop loss will be set at $0.814, just below the support, to limit potential losses. The initial target price will be $0.891, a move towards the recent resistance. If the price breaks above $0.891 and the RSI moves above 60, we will adjust the target price to $0.96, aligning with the forecast. Conversely, if the price falls below $0.814, the position should be closed immediately. This strategy aims to capture short-term gains while managing risk effectively, considering the volatile nature of Dogwifhat. Based on the historical data and forecast, Avalanche has shown a downtrend from May 26, 2025, to June 8, 2025, with the RSI consistently below 50, indicating a bearish momentum. The forecast for June 9, 2025, to June 15, 2025, suggests continued sideways movement around $20.6 to $21.0. Considering the support price of $18.8 and the RSI nearing oversold territory, I recommend a long position entry at $20.6. Place a stop-loss order at $18.8, just below the support level, to mitigate potential losses. Set a target price at $23.5, the resistance level, aiming to capitalize on a potential bounce back. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential rebound. However, the downtrend and bearish momentum are strong. Therefore, a conservative approach is best. The portfolio will be 60% long position at $20.6 with a stop-loss at $18.8 and a target at $23.5, and 40% in cash to prepare for potential downside movements. This blended strategy balances the potential for gains with risk mitigation, aligning with a high returns investment approach. Based on the historical data and forecast, Quant exhibits an overall upward trend. The price has consistently bounced off the support level of $112 and has tested the resistance level of $127. The RSI values have fluctuated between 58.6 and 74.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy with an entry price of $117. A stop loss should be placed slightly below the support level at $112 to mitigate potential losses. The target price for this trade is set at $123, aligning with the initial forecast for the week. This strategy combines the upward trend, RSI signals, and Bollinger Band's expansion. The RSI is currently below 80, suggesting there's still room for upward movement. The forecast data indicates a continued upward trajectory. Therefore, a long position with an entry of $117, a stop loss of $112, and a target of $123 offers a favorable risk-reward ratio and aligns with the projected price action for Quant. Based on the historical data and forecast, XRP shows a slight upward trend with periods of volatility. The RSI consistently dips below 50, indicating periods of weakness, but never reaching the oversold level of 20. The Bollinger Bands show XRP fluctuating within a range, with recent prices nearing the lower band, suggesting a potential bounce. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My recommended strategy is to enter a long position at $2.21 when the forecast begins. Set a stop loss at $2.17 to protect against a potential downward movement. The initial target price is $2.24, aligning with the forecast and the upper Bollinger Band. If the price continues to rise, adjust the target price to $2.27, coinciding with the recent resistance level. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach to maximize potential returns while minimizing risk. Based on the historical data and forecast, Raydium exhibits a downtrend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast prices for the next week further reinforce this downward trajectory, with slight upward movements followed by a return to lower levels. The support price is consistently at $2.15, while the resistance fluctuates around $2.28. Considering these factors, I propose a short selling strategy. We will enter a short position when the price touches the resistance level of $2.28, placing a stop-loss order at $2.35 to protect against unexpected upward movements. Our target price will be the support level of $2.15, aiming for a profit of 13 cents per Raydium. To enhance the strategy, we will incorporate the Bollinger Bands. When the price approaches the upper band, it signals a potential reversal. We will combine this with the RSI. If the RSI is above 70 when the price is near the upper Bollinger Band, we will trigger the short position at $2.28, set a stop loss at $2.35, and target $2.15. If the RSI is below 30 when the price is near the lower Bollinger Band, we will hold the position. This blended approach leverages both momentum and volatility indicators for a more robust and adaptive trading strategy. Based on the historical data and forecast, Internet Computer has shown volatility with a recent upward trend. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential price fluctuations. Considering these factors, I recommend a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below 40, indicating an oversold condition, and the price is near the support level of $5.41. The entry price will be $5.41. A stop-loss order will be placed just below the bottom Bollinger Band to mitigate potential losses, setting it at $4.74. The target price will be set at the resistance level of $5.9, aiming for a substantial profit. To refine the strategy, we'll incorporate the forecast data. If the forecast price for June 9, 2025, is $5.26, which is near the bottom Bollinger Band, we will wait for a slight bounce before entering the position at $5.41. If the price breaks through the resistance level of $5.9, we will adjust the target price to $6.1. This combined approach, using RSI, Bollinger Bands, and support/resistance, should provide a high-return investment opportunity while managing risk effectively. The strategy is designed to capitalize on short-term price fluctuations within a broader upward trend, maximizing potential gains while minimizing potential losses.